The rising rate of subsidy has always been a concern in Nigeria, and this issue is one that the federal government seems to have no clue on how to resolve. The Nigeria Governors Forum lamented that the subsidy on petroleum products, especially premium motor spirit petrol, has placed a huge financial burden on the state. The NGF, which is the umbrella body for the 36 governors of the Federation across party lines, made this known in a memo forwarded to the House of Representatives. The memo is in response to the call for memoranda by the House's ad hoc committee on the volume of fuel consumed daily in Nigeria, which is investigating the actual amount of PMS the country consumes daily. Joining us on the show this morning as we discuss the rising cost of subsidy and other economic issues in Nigeria is Adetilewa Adebajo, an investment banker and economist. Good morning and welcome to the morning show.
Good morning.
So let's start off with that ad hoc committee of the House of Representatives. They obviously have a standing committee. So what does it say to you that this ad hoc committee has had to be set up to investigate the volume of petrol we consume in this country? What does it say to you that in July 2022, we don't seem to know?
Well, it's very interesting, because the dynamics of the whole problem, I think, those are the symptoms that you're seeing that is manifesting itself. The problem is the fuel subsidy itself. We're spending $10 billion this year on fuel subsidies. You know that $10 billion can build at least 2 refineries. And on a cumulative basis over the last 6 years, if we've been spending an average of $5 billion on a subsidy, we would have spent probably in the last 6-7 years close to about $40 to $50 billion on the subsidy. So what that means is that, there's an opportunity cost that we've lost over the last 6 years, which $50 billion could have done.
So we've just taken $50 billion and burnt it up. That's what it means.
Yes.
But I want us to drill down to how much do we even consume in the first place? Because nobody should come out and tell us that we don't know the data. They are making projections of 100 million liters per day. Some are saying we shouldn't consume, up to, let's say, 45, 50 million liters per day. Because we've got less than 20 million cars in this country. Correct me if I'm wrong. We've got less than 15 million cars in this country. So then plus other areas, let's say we say, okay, people have got generators and all of that. Will that be what will tip it to 100 million liters a day?
Well, as for me, you see, what I always look at is, when you begin to argue about statistics as to how much consumption of fuel you're looking at, the data is readily available. There are people who are responsible for importing petroleum products over the years. There's data with the central bank as to the LCs that have been opened over the years. So I don't know why we're arguing about this, because the data is readily available. The National Petroleum Corporation is responsible for this, at least over the last 1 year. They've been importing PMS.
But they're saying 100 million liters, and a lot of people are disputing that fact.
Well, and these are where we should look at what is the historical consumption. So if we look at the National Bureau of Statistics, I think that data is something that we could extrapolate and understand exactly what is there. So at the end of the day, it's not the National Assembly Committee that will do that. But I think if we're very serious about that, there are a lot of people who do the data analysis and the statistical analysis that can get that projections, because the people abroad know how much PMS is sent to Nigeria.
So why then do we have this ad hoc committee? Is this another waste, and this time a waste of time?
I really don't understand what their mandate is, to be honest with you.
Well, it's in the title. Their mandate is to determine the volume of fuel. So is that an exercise in futility, a pointless exercise?
Well, not really. I mean, they're oversight function for the National Assembly. So let's wait and see what they come up with, and let's hope they'll get the right experts to do the work and the right consultants that will be able to help them determine that amount.
So this subsidy has become a very huge contentious issue. We had a presidential candidate here, Peter Obi, was sitting on that seat you were sitting, and we asked him, would you pull out subsidy? He said yes and no. He said, I'll look for what to invest it in, what is it called, the process of pulling out subsidy. But if I don't get things to invest it in, then, I'll pull it out, yes, but I'll look, if I don't get enough things to substitute it, no. I mean, it's even convoluted, the answer. None of the presidential candidates have been able to make a definitive position on pulling out subsidy. Why is it a sticking point? I mean, the president came out recently to say that if we pull out subsidy, there are going to be consequences, but we can't continue with this drained pipe.
Well, You see, they talk about karma. I think about 10 years ago, people were protesting on the streets of Lagos, Occupy Lagos, that they're not going to put in the subsidy. They don't want. The same people who are protesting are now the same people who are here. There's certain things you don't politicize. You have to know when to understand that there's some national issues that everybody needs to take a collective decision in the interest of Nigeria. Now, at the time they were supposed to do it, they politicized the issue. Now they have a situation where they are now spending close to $10 billion a year on this same subsidy, and they can't do anything about it. And so they don't have any sympathy. So the reason why the subsidy has been politicized, so instead of us trying to come together as a national unity country to have a common purpose of subsidy, we have made subsidy a political issue. Subsidy is an economic issue. If you politicize it, then the decisions become more difficult. The advocacy I've had is that, yes, you don't take out a subsidy overnight. Over the last 6 years, if we had been taking a certain percentage over, the subsidy would have been out by now. If you had done it over a 7-year period, you'd have eased the burden on the economy, and the shocks that you would see that you might be fearful will cause inflationary pressure, you'll be there. But again, what's going on here? We're paying 800 naira for diesel. In my office, we have to switch off the generator for like 3 hours a day because we can't afford to run the generator, for 24 hours. It's not possible anymore because otherwise those costs are costs that we can't bear, and I can't pass it on to any of my clients.
Oh dear, I'm looking at your report here, Out of Recession into Stagflation, in which you pose this question: what is the true state of our economic decline, debt levels, and descent into a state of anarchy? Dare I ask you to just, spell that out? Let me brace myself to hear the answer.
Well, I think it's good now we look at the fundamental economic issues that we're talking about when we come to this subsidy, instead of focusing on the price of petroleum products or how much volume of that product we're importing. If there was no subsidy, there wouldn't be a question. The problem you have is that the National Petroleum Corporation has a monopoly on the importation of PMS. So that is subject to what they say, and it's not a market-driven process. So again, it has those complications. Now, Nigeria has a critical problem in terms of our fiscal deficit. The fiscal deficit has become a macroeconomic risk. Nigeria today is insolvent as a country. So, and I think that is what we need to understand. We spent 11 trillion, that's the charts coming up. We spent 11 trillion naira last year, and we only had revenues of 4 trillion naira. As you can see from these charts, the level of our revenues, which is in blue, and the level of our expenditure is in orange. So the differential is what that deficit is. So our deficit currently is close to 8 trillion naira. And as you can see, over that sustained period, apart from this $50 billion that we've blown on subsidies, we've also accumulated a deficit of close to 30 trillion naira. So right now, Nigeria is insolvent. So for last year, for instance, we spent 11 trillion on expenditure over revenues. We're only able to generate 4 trillion. So what that means is that for every 100 naira we're spending, we're borrowing 60 naira. So clearly that is unsustainable. So if you're in any doubt about that, Nigeria is insolvent by any standards. And if you take this balance sheet to any bank, nobody's going to borrow you any money. But because we're a sovereign state, we still have that credibility. Our debt profile is now at $100 billion. 60 billion of that is domestic debt, and 40 billion of that is foreign debt. So that is significant debt levels that are sustainable. The finance minister herself said that Nigeria is spending close to 95% of those revenues just on debt service. So that is why the governors are complaining, because the National Petroleum Corporation has not remitted any money into the Federation account for the last 6 months. So they're finding it difficult to give them their allocation at the governor's level. So that is where the issues of the governors are. It's hitting the governors hard now. So they're taking up the matter. So we have a lot of structural issues and that we need to address in this country today because it is becoming crazy. And there's also some other debt that is still in the central bank by the Ways and Means financing. The Ways and Means financing now has crossed over 20 trillion naira. Now, if you add that to the foreign the debt stock of $100 billion, you're looking at close to 150 billion in terms of what our debt stock is. So right now, debt service is also, all your revenue is going towards debt service. Where's the money you're going to use to pay salaries? So that's why they're saying that we're borrowing money to pay salaries and run our recurrent expenditure. And we don't even have any funds to make any capital expenditure. So it's important that we come out quickly because even the Ways and Means financing, there is an issue whether it is violating the CBN Act. Because that Ways and Means financing is supposed to be temporary and you're not supposed to use more than 5% of the revenues from last year to provide Ways and Means financing. Right now, it's close to 100%. So the central bank needs to let us know, what the state of this Ways and Means financing is and if it's violating the CBN Act itself. Because it's supposed to be, if you borrow from Ways and Means, you're supposed to pay it back the same year. It's supposed to be a temporary overdraft, not a permanent source of funding. So in terms of the debt profile of this country, technically we're insolvent.
And when you look at that, so if you say 150 billion, 100 billion, debt stock we have, and 50 billion from Ways and Means, that's about 150 billion. So that means we have in debt half of our GDP as we speak now. Or close to half of our GDP.
Our GDP is 420.
420, so close to half of our
close
GDP.
To half of
our GDP is already in
close
debt.
to half of our GDP.
So that means realistically speaking now, our debt to GDP ratio should be more than the numbers that are being quoted now.
If you add the Ways and Means to it, yes.
So it should be in the high 40% now.
Definitely.
And when you also look at that, we have terrible problems with inflation hitting us. And we also have insincerity because this same subsidy was said to have been pulled off at some point in the last 2 years when even petrol prices went down. Was less than 165 at a point. It was 163 at a point. And the argument then by the NNPC that, subsidy has been pulled out, it's in tandem with international prices of petrol now. So what is really happening as regards that? Well,
you see, the whole, when you begin to run, if you take a look at diesel, the diesel pricing is transparent because it's more market driven. So you can understand the calculations. You can do the calculations. I mean, if you take a look at the oil traders, they'll tell you oil is trading at $100 a barrel. You know what the cost of refining is, and you know what the landed cost is here, and you can add some of the handling charges to that and determine what your market price is. So it's a formula that you put in. The only variable that will change will be the cost of the petroleum products. And if you engage in some futures or options, then you can lock in certain prices, which is what you normally would do, so that you can lock in a price over a year. So these are the issues that you need to look. It's about transparency and accountability because the international price of petroleum is market driven. And that is the key factor there. And if you use that, you can calculate what our cost would be. But there's no transparency in the accounting. And I think that's really where we have the challenge. So until you make that product a market driven product, you put competition into that business, then you can have the accountability and you can have a better understanding of what the real price is here. If you go to Ghana, for instance, you find that their prices are benchmarked on the international price of crude, and they're paying the right price for
And with
that.
this level of inflation we have?
Inflation is a challenge in the sense that what is driving inflation is that Ways and Means financing. We already understand that we have the...
So Ways and Means is QE, we're printing money.
Yes.
Is that what it means? Let's call it what it is.
Yes, it is.
That's quantitative easing.
It's not all quantitative easing because quite a lot of it has gone into the intervention funds and all the anchor borrower schemes also. So it's not everything QE. There's a significant point of QE there, so I don't know the breakdown. But on the central bank balance sheet, it's stated there clearly as credit to government. And the last one I saw, credit to government, was $18 trillion. That's on the CBN balance sheet. It's available on their website. You can look that up. But right now, I understand that has gone up to about 22 trillion as we speak today. So we're waiting for the latest numbers. So the issues, I think, really is that everything has to be market-driven and market-focused. And, as long as you continue to subsidize, then you have a problem.
Well, let's talk about the practical implications. So just so everybody understands exactly the precarious situation in which we find ourselves. The practical implications of Nigeria's insolvency. Mm-hmm. And also we have an election around the corner. I think one that I can think of the candidates has a manifesto at this point. What would you need to see on each candidate's manifesto to give you an idea that this person actually has an inkling of what they ought to be doing?
Thank you very much. I think that's a fantastic answer, because I think it's important that anybody who is coming in to lead this country understands the current situation that we're looking at. So I think the fundamental thing I want to take a look at in anybody's manifesto is the fact that they understand the situation of Nigeria today. That is, we are under a serious fiscal challenge. The revenues we have cannot fund the operations of government. So the first thing that I will be looking at is, what do you intend to do to be able to fix the problem of the fiscal challenges that Nigeria has? What are the structural reforms that you want to bring in to show us that you have an understanding that you can put in key structural reforms to be able to put the government on a path of stability and resolve this insolvency? If we're not very careful, we're going to go into a debt crisis. We're not going to be able to meet up these debt obligations. That's the way we're going. Because the irony of Nigeria is that oil is trading at $123 a barrel. And we're supposed to be enjoying a windfall, but we're not, because we're burning that money. We're burning that money on subsidies. So instead of investing it or putting it in a fund, at a point in time in Nigeria, our excess crude account was at $18 billion. That was what we had in excess crude account, $18 billion. Today, we don't have anything and we're in some debt. So any person who is running for president now, first of all, has to give us a structural reform plan that he understands what is going on and the key structural reform issues that he knows what to do about it. That's number one. How do you now put the Nigerian economy on the path to growth? That is number two. The potential for Nigeria's GDP is $1 trillion. We're now operating at 424. At the height of our GDP, we were close to about 680 billion. So we've lost about close to $250 billion of our GDP. That $250 billion is the GDP of Portugal. That's what we've lost in the last 6 years. So you need to tell us how you want to grow the Nigerian economy by at least 6 to 7% per annum to be able to meet the potential of the $1 trillion GDP potential that Nigeria has. I have a lot of faith in the economy of this country. If we put in the right reforms, put in the right structures, Nigeria can grow. The SMEs in this country, about 20 million of them, contribute to 50% of that GDP. So don't get it wrong. It's not the big companies. It's the Nigerians on aggregate that are contributing to 50% of our GDP. So if you unleash that potential, there's so much that needs to be done. So what I'm looking for from a presidential candidate, what is our structural reforms, number one, path to growth, and then who are you going to make your central bank governor? Because that is the key. We've had a static exchange rate mechanism that is causing distortions. And you have the official rate and the arbitrage that's coming between the parallel market and the official market. Remember when the official market and the parallel market were very close? It didn't make any difference to anybody where you got your money from, whether it was from the parallel market or the banks, because the rates were so close. So people flowed in their money. We have $25 billion worth of remittances from diaspora. So any presidential candidate, what are you going to do to stabilize Nigeria's foreign exchange regime? So who are you going to make your central bank governor to be able to put in the right policies that will drive effective monetary policy that will grow Nigeria to its potential? Because I believe that with the right management, with the right policies, we can grow this economy by 6 to 7% per annum, and we can reach close to 800 billion. If we reach $800 billion in GDP, we will automatically lift 100 million people out of poverty. So the solution to this poverty we're in is for us to grow our GDP and our output. So anybody that wants to rule this country, that is what I'm going to be looking for. If I don't see that, then I know that it's business as usual.
And the sad reality is that it's always business as usual in the case of Nigeria, except something changes. What will be those new sectors that we can capitalize on? Because we need to start thinking and looking, okay, yes, oil will still give us some revenue, but what are the other new sectors you think can help, push our GDP and spur that 6 to 7% growth that we're growing at a time in this country a couple of years back? I mean, over 5, 6, 7, 8, 9 years ago.
We need to leverage on the digital economy. We've put in a telecoms infrastructure, and we have penetration. We have close to 100 million phones. You've seen what has happened with the fintech companies. Over the last 5 years, despite or in spite without the government, startups in this country have received close to $5, $6, $7 billion from offshore.
Yes.
Okay. This is not local money. This is money coming from venture capitalists from outside the country, putting money into Nigeria. The money coming into startups is more than our FDIs. Our FDIs have gone south to less than $1 billion. It's insignificant right now. So they're high growth sectors of the economy. You have a population of 200 million people. Do you want to make this population a liability or an asset? If your population is a liability, then they're in poverty. But if they are assets, then you create purchasing power, which they can use to create consumer demand and begin to purchase things. So first of all, you need to work with your population and empower them. When they empower them, then you have purchasing power, then they can spend. They buy more things and the economy becomes more creative. So you need to start internally. All those other industries you're now talking about are going to blossom over this. So there are many areas in the creative sectors that we're looking at that are emerging. So if you think that the fintech industry, what you see are just the shoots. If you nurture these industries, they can grow into big trees that will sustain this economy going forward. So we have to work with the creative industries, we have to work with the fintechs, and we have to begin to take a look at service. Outsourcing. What are we doing? If you go into India, you find a lot of people who are coding. What are we doing with the education system? So we need to empower our youth to be able to have the right skills that they can help them fit into the digital economy and do that. That way, you can have significant growth in the economy because there is potential in this economy. You can create 10 Dangotes, 10 Otedolas, 10 Wale Tinubu's, Bua, Samadi Siaku's. You can create another 10 of that quite easily.
We absolutely can. Hope springs eternal. But even though the current Muhammadu Buhari administration has about maybe 6.5 months to go, what can they do in the short time? Because we really, even though I did ask about the next president of Nigeria, we can't wait till next year. We're facing an emergency. We're actually facing anarchy, which you emphasize in your report here. You also gave credit to the Buhari administration for putting together a sound economic team. However, sound as they are, they did not deliver. Why? And what can be done now, immediately?
Well, to be honest with you, nothing. The president has become a lame duck president. And what he needs to focus on right now is to concentrate on his legacy. He needs to finish off the second Niger bridge and commission that. I think the Lagos-Ibadan rail they need to complete that properly also, so that he can begin to take a look at his legacy and at least know that there's something that he's delivered. Because right now, I'm not going to put a bet on this president. And one of the key indicators of confidence is what you take a look at. If you take a look at our credit default swaps, there are certain things called credit default swaps, which are international instruments that you use to measure the confidence in any economy. And if you take a look at Nigeria's risk rating right now in terms of our credit default swaps, you can see from this chart that it's gone from about 300 basis points now approaching 600 basis points. That means that the perception of the international community on Nigeria is that we feel that Nigeria is now a risky area. And what you're betting is that if you need to buy insurance, if you have Nigerian debt, in order for you to insure that debt against default, you're going to pay more, which means that there's a likelihood that we will default on our debt. So the outlook is not very positive on international markets from credit default swaps. So there's really not much this president that can do but to maintain status quo and let us wait, as you've said, to see what the policies of whoever is coming in and how they can reform that. So basically, just maintain status quo, maintain the ship, and it shouldn't get worse.
Let's talk about forex. Big problem with forex. We've lost over 300% in our currency in the past couple of years. It keeps going up and down like a yo-yo. What's happening? What can we do to stem the tide?
Well, like I told you earlier, oil is trading at $123 a barrel.
Yeah.
So what that means is that our revenues, which is oil dependent, should be going. So you see, the problem is that we are running a static exchange rate mechanism. So whether the oil prices goes up or down, we don't adjust. So, but if you had a market-driven exchange rate mechanism, you freed it up and you shut all these windows, then you see something that is more market-driven. So when oil prices go up, then the Naira will appreciate.
But some people argue a lot that the market forces can act against us too. Like we are going through now. Like what if we have a downtime when it comes to oil?
Yes. So,
how can we defend it?
Yes, so but you don't defend it. You understand that is the way it is. Because when it's in your favor, like when oil is 123, then you benefit and you store up your reserves. So, but if you continue to be static, then you don't benefit. So right now, with oil hitting $100 a barrel, the Naira, as far as I'm concerned, maybe should be trading at 200 or 250.
But it's still losing. It's trading at over 610 on the parallel market.
So for me, that's
423 now on the
and it's 610 on the parallel, 612 on the parallel market. So those are the distortions you cause when you run a static exchange rate mechanism, and that's why I told you that whoever is coming in has to tell us what kind of central bank governor he's putting in, what kind of policies he's putting in to be able to run the exchange rate, manage monetary policy, manage fiscal policy, and what strategies do they have to grow the economy. But like I've always told you, I have faith in this country and the potential of a $1 trillion GDP. How we get there depends on who is leading us.
Well, we will get there, hopefully. Thank you so much, Adetilewa Adebajo.